What's up, YouTube? I'm so happy to be back. I finally have Wi-Fi, guys. Thank you so much for your patience. I appreciate that. It was a long, hard week without quant updates. So thank you guys for your patience. Please like the video because it's going to be a struggle right now because we haven't made a video for a while for the YouTube algorithm to get my video out to people. So of course, if you can retweet my tweet of the post or just share the content, that'd be so appreciated. Of course, like and comment as well so it reaches more people. And of course, the best thing that we can do is subscribe. So make sure to go ahead and do that. Over half of you are not subscribed to the channel. So very important weekly chart, very messy. However, we can see, if I remove the drawings, we can see this ascending triangle really taking shape. And the resistance of this ascending triangle, as you can see, is the orange line. This orange line is the 55 weekly EMA. As long as we're below this, and if these two over here, the 20 and 55 crossover, that's a bearish cross on the weekly time frame. That's your bear market signal basically on the weekly time frame. Sorry about that. We haven't got that just yet. To invalidate this, we obviously need to go ahead and break back above this. If we do continue lower and we lose this low, then of course that's going to drag the 20 below the 55, forming that bearish cross, and then we're going to get that bear market continuation. But we're not seeing that whatsoever at the moment, so we can't say that's going to happen. All we've done at the moment is basically shown signs of a precursor to a bear market. Of course, we had this descending triangle here, which we called. We did think that this was going to be the bottom. However, once we lost this low, we recognized this head and shoulders pattern, and then we gave you the technical target to the downside. Of course, I told you once we lost this $150 mark area, we're going to come down back to this previous swing high at $85. But I told you guys that we need to be careful, because even though we start heading up here and we hit $150, we're still in a valid technical target out of this head and shoulders right here. Can you see that? From the top there back to the neckline, break the neckline right there where we broke it, or just there, and then that's your technical target, which is also the 1618, measuring the fibs from this low to the high, because we had this impulse up here. If I measured from the top to the bottom here, we had this impulse to the upside right there that went to the 050. That is a dead cat bounce basically, where we've come down and retraced 50% of the push down. So we come back up 50% before continuation down. Can you see that? So from the low to that high, your target is the 1618 down here. However, just because it's the target does not mean you're going down there. How do we invalidate $70? So we have two reasons for $70. As long as we're below the neckline, which is also $170 up here, but also $150 psychological level because it's the support. As long as we're below this, then actually technically, no matter if you are going up, you're still in a $70 target. But obviously we're seeing higher lows, we're seeing bullish patterns forming like this ascending triangle here, this double bottom, for example. But of course, we're not in the clear yet. We know we need to break the neckline to validate this pattern. Of course, once the pattern's validated, then we do have technical targets to the upside, which is amazing, which probably is going to bring you back above this. But until then, we can't say that this is completely invalidated. For the moment, though, there is another way we can invalidate the $70. So the head and shoulders target isn't invalidated of $70, but another way we were going to $70 has now been invalidated. So there are two reasons: the head and shoulders, but also this Fibonacci here. Once you lose the 1, your target is the 1618. We did lose the 1. We actually came all the way down to the 1.272, almost to the 1414. We did hit our $85 technical target of this previous swing high, and we were telling you that if we lose this swing high, you go to the swing low, which was $70. So we invalidated this $70 target by bouncing off here, reclaiming the 1 level, which is this line. So I'm going to put a line in the chart just there. So we invalidated it by reclaiming this wick low over here. And then we obviously validated the 1618 again once we lost it. But we put in a higher low with the doji on support, and that's when we start pumping up. Now we are above $111. As long as we continue to be above $111, we should start heading back up to $150. The only thing in the way of $150 is this resistance up here of the neckline of the double bottom, because we know the only way to go up higher than that is to break the neckline to validate the target. Without breaking this neckline, we can't say we're going to go up beyond this. We could just come up to it, get rejected, put in a lower low, go to our $70 target. This is that risk that I want to make you guys aware of. And if you appreciate me trying to make you guys aware of every single scenario, then please smash the like button and of course subscribe, as again, over 50% of you are not subscribed. So let's go ahead and take the daily time frame. Just before that, I know it's very, very messy, but I do want to put a resistance here, and I'm going to make it purple, so I just remember because there's so many lines. And then I'm going to draw an ascending support right there. So when I go to the smaller time frames, I've got the exact levels. So yeah, because look, on the daily time frame, it's like, oh no, it's actually up there, when on the weekly, it's a bit lower. So I'm going to get you the technical target. It's the lowest body candle close to that high. I'm actually going to go to the weekly because we're doing it on the weekly. So yeah, that's still correct. Put that on the breakout here, go back to the daily time frame, and you can see that our technical target would be around $200, and you can see that is that previous high. So it really does make sense, because we know once we're breaking out of this ascending triangle, we're going to the next high here. So as break resistance, we're going to the next resistance. As simple as that. We just know in the way is 150 to 170, this area over here. So it's going to be a struggle in and around there basically. I'm going to get rid of this green line over here because we're using this neckline here. I'll keep this green box, just put it across like that, because obviously we got rejected here and here, so I know that it's not just a single line, it's an area of resistance. So going to the 4-hour time frame, we are still within this ascending triangle. I think the last time I left you, we were in this range over here where we had this M pattern and then this double bottom where we broke back on down. We had another double bottom forming, and I said that if we do break above this, we're going up to here. Now we did not get it, which is so annoying, and we came back to the ascending triangle support. Now if some of you were smart enough, and I know a lot of you would have been able to realize this, that this is your target once you break above this pink line. So regardless of you coming down, if you eventually come up and break this thing over here, even though I said it in the past, is still valid. So look, once we broke above it, where did you go? You met your target. So even if right now we were expecting this double bottom to break out and that being your target, look, from here to here, put it there. Even though you basically never validated the pattern's target, and now it does not look like a double bottom with us creating some new patterns over here, this double bottom's target will still be valid in the future. Although it won't be a double bottom anymore like the entire structure, this double bottom's neckline is still valid. So when you break that neckline again in the future, could be a year away, still the same thing will happen basically. So I hope you guys understood that and can take some notes going forward. But you can see that this previous support here was flipped into resistance, got above it, couldn't hold it, resistance, came back down for support, resistance, support, broke out, now holding it as support. So this is a good bullish retest. As long as we're above this green box now, we have to say, well, obviously we're going to come back to this top over here, which is exactly what we're doing. Break above this red line now, we should be coming back up to this. You can see that is above the 0.618, and we know that if we are closing and staying above the 0.618, we should eventually get up to the 1 at $133. This is going to be to the neckline of the larger ascending triangle on the weekly time frame that we are seeing. So that larger double bottom that we are seeing. If we're getting a weekly candle close above $135, that is your long opportunity. And because it's an amazing gain already of 50% almost, there's no reason to leverage. I don't personally leverage alts. I will only leverage Bitcoin and Ethereum because they're stable. They won't do random things. You know what I mean? If they do something, everything follows. Whereas altcoins, if they do something on their own, they're eventually going to come back to reality and follow Bitcoin and ETH. And if they pumped, the alts pumped, and Bitcoin and ETH didn't pump, then just know the alts will become a fake out. So guys, I hope you enjoyed today's update. Please like, please subscribe, and I'll catch you in the next one. I'm so happy to be back, and yeah, Peace. So guys, these are my crypto packages. Let's bring you over to the one-on-one mentorship, where it's £650 one-off payment. You will get video call lessons with me over a 1 month period. We will do 1 or 2 hour lessons every single day, and you don't need any prior knowledge whatsoever. You can have zero, you can already be an advanced or intermediate trader. My job here is to 10x your learning curve. Everything that I'm teaching you has taken me over 3 years to gather and cost me over £10,000, whether that was good courses, bad courses, mistakes, scams, or whatever it was. It cost me over £10,000 to get all this information that I'm personally teaching you. I also had to pay for my mentor over $2,000 for a 2 hour lesson. So what you're getting for this price is absolutely phenomenal. Now, you also get the 6 hour crypto course included in this price, as well as the signals chat until the top of the bull market. Now let's move over to the signals chat. I wouldn't call it signals. This is just basically a group where I post what I'm personally doing, my thoughts on the market, if I think it's going up or down. So there's daily chart updates, but also, yeah, throughout the day, what I'm thinking, or where I'm buying, where I'm selling, where I'm looking to accumulate, or obviously get out the market. This is what's in the crypto chat, and that's £25 for your first month and £40 onwards. Then we can move over to the 6 hour crypto course. There are over 35 plus videos in this. You don't need any prior knowledge to start. You can be beginner, intermediate, or advanced level trader. My job here is to 10x your learning curve, to make you into that self-sufficient trader, to make you into a trader that doesn't need outsiders' help. Not my help, not any YouTubers' help, or any crappy group chat. So if you're interested in this, you also do get a one-on-one mentorship lesson with me at the end of the course, so you can get any questions answered, so you're clear and you know exactly what to do going forward. If you're interested in any of these packages, then please go to my Twitter at Louis_crypto and literally comment down below and just say, Louis, I'm interested, and I'll personally private message you to see if you qualify for any of these packages. Thank you guys for listening, watching the video. Please like, subscribe, comment, and I'll catch you in the next one.